There's a common misunderstanding that's going around that makes people not want to look into Bitcoin. It makes them think that, okay, this thing is going away, it's going to zero, it's a scam, it's this or it's that. It's just not going to get anywhere. And that misunderstanding is that Bitcoin is a Ponzi scheme. Bitcoin is not a Ponzi scheme. I can explain to you exactly why it's not. And what I'm going to do is, in this video, I plan to do that. And what I'm going to do is I'm going to show you an example of an actual Ponzi scheme that took billions of dollars from people and collapsed, right? So let's start with what exactly a Ponzi scheme is. We'll go to a different link here. So this is Investopedia. Ponzi scheme is an investment scam that pays early investors with money taken from later investments to create an illusion of big profits, right? Pretty simple. Basically, what you're doing is you're taking money from new investors and you're paying back old investors with that new money that you're getting. You rely on the old investors who have gotten paid out to tell new investors to keep giving you money, Eventually, the new investors run out and you can no longer pay back the old investors. Your debts get too high and people start wanting their money back and everything just falls apart. A Ponzi scheme promises a high rate of return with little risk to the investor. It relies on word of mouth. As new investors hear about big returns earned by early investors, inevitably the scheme collapses when the flow of new money slows, making it impossible to keep up with payments of alleged profits. So if you really think about it, something like, in my opinion, something like the US dollar is a Ponzi scheme. And let me explain exactly how that works, but I'm going to go to a different Ponzi scheme that actually happened that some of you may have actually been alive and maybe you experienced it. Maybe you actually were taken advantage of by this, right? So Bernie Madoff, everybody knows about him. Everybody's heard about him. He started something called a penny stock brokerage in 1960, and he used this brokerage. He made a lot of money from this brokerage. He ran it for a very long time, and he used this brokerage and his reputation in the financial services industry to take billions of dollars from thousands of investors, right? And he did this by essentially promising certain returns. So what he did was he promised, let's say, 15% returns, better than the S&P 500, and everything was going well from, I think, so he said that it was from 1990 all the way till 2008 when it was caught. And what happened was people were not getting paid. They stopped getting paid for what they were supposed to get, and they wanted to take their money out. So everything collapsed, right? One of the things that you have to consider is that Bernie Madoff gave people promises for returns that they would consistently be getting. And he intentionally tried to keep how this thing works as hidden away as possible, right? He tried to stop people from even thinking that this thing could go to zero. He didn't let people know exactly what was happening. There were some investigations where people looked into it and they saw that this thing is very unrealistic. The returns are very unrealistic. So this person, Harry Markopolos, told the SEC that he believed it was legally and mathematically impossible to achieve the gains that Madoff claimed to deliver. According to Markopolos, it took him 4 minutes to conclude that Madoff's numbers did not add up, and another minute to suspect that they were fraudulent. So it seems like it was pretty easy to see because there was a promise of returns. The amount of returns that he was offering were much higher than what the S&P 500 was doing, and he said that it was due to a special strategy where he was selling call options or something along those lines. He was doing something where he was massively outperforming the market in general. And this was a problem because eventually the people he planned to pay back, so he says it here, Madoff told them he was finished, that he had absolutely nothing left, and that his investment fund was just one big lie, basically a giant Ponzi scheme, right? So he had to pay back these people. He didn't have money to pay them back. He used this money to enjoy his life, right? And when you look at how this worked, you had a central party, you had a group, actually one single person who was basically managing this whole thing. He was taking the profits, he was spending the money on himself. He basically promised that there would be no losses, right? And his goal was to make sure that people continued to give him money, continued to keep paying him. And so you can look at the details here. You can look at all the details here. And his goal was that his goal was to make sure that people keep adding more and more money, right? So it was split strike in which he bought. Oh yeah, there it is. So he bought blue chip stocks and took options contracts on them. So basically he used leverage to try to make more money. That was pretty much what it was. They frequently made their trades on stocks monthly high or low, resulting in high returns that they touted to their customers. So when you look at how this thing worked, there was consistency, right? There was 100% guarantee that they would likely. There was 100% guarantee that these people were going to get their money back. That was what he was trying to give people. He was trying to offer that to people. On the other hand, with something like Bitcoin, you don't have guaranteed returns. There are no. There's nobody who's too big to fail. Nobody gets paid back by the network. The network is just a group of computers. It's computers from all around the world. They're all independent. They have nothing to do with one another. They don't control this thing. They don't control how Bitcoin works. So I'll show you mempool. This is an important site. All it is. It's very simple when you really want to understand it. It's very, very simple. It's a network that processes transactions. That's it. There's no Ponzi scheme here. There's no central party. The person who actually created it is gone. Right? You can look at their wallets. The person who created it in the beginning, they made it public, right? This was something that everybody could access. Nobody was held back from accessing it. I'm trying to spread the word because I know for a fact where this is going. I know this is not a Ponzi scheme. Most people are not at that level of understanding. Most people don't get what this is, right? So they just assume that's a Ponzi scheme because, it gives massive returns. The reason why it does give massive returns is because Bitcoin's price is purely based on supply and demand. So actually, I meant to show you this. So if you look at the very first block that was mined, the wallet, the Bitcoin is still there, right? This person who created this, they were very, very likely the ones who created this network. The person who mined this block was very, very likely the one who created this network, right? They didn't even get to take advantage of it. Right, the coins are still here. You can actually see the balance is still here. It was never moved. You can look through I think there's something like 21,000 wallets with 1 million Bitcoin. We'll look at this block right here. Same thing. This is block number 16. This person has seemingly disappeared. This person isn't even part of it anymore, right? Their name is Satoshi Nakamoto. They're anonymous. I think this is something that people can't wrap their head around. The fact that they don't know who this is, because either this person has died, this person has completely just eliminated themselves from public knowledge that they are Satoshi Nakamoto. For all we know, somebody in the middle, somebody like the U.S. government could be Satoshi Nakamoto. Nobody knows. But the thing is that there's nobody who controls this network. So if you think of it as a Ponzi scheme, let's say with Bernie Madoff. With Bernie Madoff's Ponzi scheme. So we'll go back here, mechanics of the fraud. So with Bernie Madoff's Ponzi scheme, he was just paying people out. No matter how much money they gave him, he would eventually pay them out more than what they gave him, right? It was a promise. He made sure that people thought that. He made sure that people had that in their mind before they bought in, right? He made it limited. He made it so that only a small group of people could access it. He told people that if they leave, they can't get back in. These are signs that this person wants full control and they don't want anybody to know what's going on, right? That he tried to hide the information that he had. There were reports on this. It was this. When you look at how the mechanics of Bernie Madoff's Ponzi scheme worked and how Bitcoin works, when you look at Bitcoin as just a payment network, basically it's an asset that you can send and receive. That's it. I can send you Bitcoin, I can receive Bitcoin from you. The dollar value of Bitcoin, the price that we value it at, has absolutely nothing to do with the network, right? Even if Bitcoin were to go to zero, let's say Bitcoin's price were to go to $0. Let's say right here. So the subsidy that miners are getting paid goes to zero. The value of the network goes to zero. The cost goes to zero. Even if that happens, nothing will change, right? The network will continue to operate the way it does, right? It's supposed to create a block of information, a block of transactions every 10 minutes. And if the price drops to $20,000 in the next second, this will keep happening. It won't change. There's no change. There's nothing that will there's nothing that can stop this from happening. There's nothing that can stop these blocks from being created, right? The dollar value of Bitcoin doesn't mean anything. The fact that people own it, they borrow money to buy it, has nothing to do with the actual network, right? The actual network. This is the actual network. All this network does is it confirms that somebody has something and they can send it to somebody else. That's it. There's no debt involved. You don't have to borrow money to you can easily borrow money to buy Bitcoin. I'm not saying you can't. You can easily do that. No question about it. If we go into, let's say here, the only thing we know is that this wallet, this address held Bitcoin and they sent it to, let's say, this address right here. They moved the person who owned this Bitcoin moved it to the people who owned these wallets here. That's it. That's all we know. We don't know who it was. For all we know, it could be the exact same person. It could be the same person doing it, right? There's no, so somebody just moved, this is pretty cool. Somebody moved $47 million worth of Bitcoin, right? But the thing is that this $47 million worth of Bitcoin had no debt associated with it. We don't know where this Bitcoin came from. All that the network knows is that you have Bitcoin. That's it. How you acquired it is irrelevant. If we look at, let's say, gold, for example, you can sell your gold anywhere in the world. Anyone in the world is willing to accept it because they know that you have that physical gold, like that physical thing, right? There's a physical asset associated with gold. Does that make gold a Ponzi scheme? Even if gold's price goes up to $10,000 overnight, does that make gold a Ponzi scheme? No. There are very likely going to be people who took on debt to buy it. The asset can't be a Ponzi scheme. This network, this is just a group of computers that are agreeing on a set of rules. How can that be a Ponzi scheme? There's 100,000 computers around the world. Anybody can join that computer. Anybody can join those computers. Anybody can produce a block if they're willing to put in the time, the effort, the energy to understand how Bitcoin works. Anybody can do it. The issue is that it costs money. It costs time. Most people are not willing to put in that money and time to understand how this thing works. There's a learning curve here, right? There's a lot that goes into actually participating in the network. On the other hand, with Bernie Madoff, all you did was you gave him money and you trusted him to do whatever he could, right? That was it, right? It was very simple, very, very quick, very easy for people to do. And let's go back to Investopedia. So it basically has a group. Ponzi schemes are built in layers, right? They're built in layers of people at the bottom, basically salespeople, people in the middle, management, people at the top, executives, right? That's what a Ponzi scheme is. On Bitcoin, there is no layer. Everybody who owns Bitcoin has the exact same power as everybody else. Everybody who owns every miner, every ASIC miner has exactly the same power as any other miner that's built the same way, right? If you can find an area with cheap energy, you can deploy miners and you can make Bitcoin. You can create Bitcoin. It doesn't matter who you are. There's no executive team. There's no central party. Satoshi Nakamoto, the person who created Bitcoin way back, doesn't even exist anymore, right? So when you look at how this works, when you look at the fact that there's basically guaranteed profit. So a Ponzi scheme promises a high rate of return with little to no risk to the investor. What does that make you think about? That makes me think of something very specific. That makes me think of US government bonds. That makes me think of the fact that the US government can issue as many bonds as it wants to. It can keep offering a certain rate of interest. It can say that, okay, so you can even see here, when it comes to conservative investments, nothing says the safety of principal like treasury securities. So treasuries are essentially promising you a certain level of return, let's say 5% per year, no matter what happens, right? So it says here, Treasury securities are one of the safest investments as they are backed by the full faith and credit of the US government. What is credit? Credit is trust. We don't know that this money is going to be paid back in the future. We trust that it will be, right? On the other hand, with Bitcoin, when you have Bitcoin, when you get paid in Bitcoin, you know for a fact that somebody moved something of value to you. In this case, it's just a line of code. It's just basically permission to use this network. You need Bitcoin to pay the transaction fees on the Bitcoin network. So owning Bitcoin is the only way to use the network, right? If you don't own Bitcoin, you can't use the network. On the other hand, the US government financial system, the US dollar financial system is fully based on trust, right? It's fully based on trust because we trust that the US government will pay us back in 30 years. We trust that we'll get that money back in 30 years. But how exactly does the US government pay us back? There are a lot of problems with how the US government operates. Uh, the US government the US government is basically taking on as much debt as it can, and it's it's borrowing so much that to pay back the interest is just the cost of borrowing money, right? To pay back the interest, the US government has to borrow more money. So what does that tell you? They're paying back people who already have debt, people who already own treasuries, by issuing more treasuries. Who's buying those treasuries? Those treasuries are being bought by, let's say, American citizens who have their pensions, who have their savings, who have all of their money set aside for the future. Those people are buying the newly issued bonds. And what happens when so many of those bonds are issued that nobody wants to buy them anymore, right? This is the thing that we're facing right now. With the US dollar financial system, the US government relies on the Federal Reserve, which is basically the US government's bank, to lend them more money to keep buying US treasuries, US debt. So these treasuries that are supposed to be so safe, are not safe, right? They're being paid, the debt is being paid back with money that's being created out of thin air. The US government is paying back the interest on its debt by borrowing more money. If you can't see the problem there, if you can't see that the US financial system is a Ponzi scheme, then you definitely won't see that Bitcoin is not a Ponzi scheme, right? When you look at the US government debt, when you look at how much debt the US government has and how quickly it's growing, it's kind of scary to even think that this thing is continuing to survive, right? We use US dollars for everything, and we earn US dollars, we pay for things in US dollars, and the US government, the US central bank, the Federal Reserve, the US government, they've taken advantage of that, right? They keep borrowing more and more money. They keep sharing that money with they keep sending that money to other countries, and it affects everybody in the world, right? The Canadian dollar, for example, has is a very, very similar situation. The Canadian government is borrowing as much money as it can, sending that money over to other people because they want to keep their relations, or they want to continue to have these countries be able to fight. But the only thing it's doing is funding death and destruction. The money that they're borrowing is supposed to be an investment, right? It's supposed to be when you borrow money, you're supposed to use it as an investment in your future, right? You're supposed to use it as a way to improve your citizens' future. The people who are borrowing this money are expecting to be paid back in the future. Like all this U.S. national debt, the U.S. government owes. We can see here, U.S. unfunded liabilities, Medicare, Social Security. Social Security is going to be next to worthless in the next few decades, right? The U.S. government owes assets per citizen versus liabilities per citizen. The US government owes more to its citizens. The US government owes more than it has per citizen, than it owns per citizen. So this is a company if you looked at the US government as a company, the US government is already insolvent. They don't have the money to pay back these debts. And I think the main problem here is that the U.S. government can just print more money out of thin air to pay back everything that it owes. So what's going to happen when all this social security is being collected? The U.S. government's going to have to print more money, right? It's going to keep having to print more money. The U.S. government owes 214,000 to all of its investors, all of its the people who are relying on it to do well in the future, and a lot of this funding comes through U.S. treasuries. So when you consider all of this, it's kind of difficult not to see that the U.S. government is running a Ponzi scheme, right? They're running a Ponzi scheme. They're spending money however they want to, and this is, it's not like you're getting paid back in money that's that's worth the same amount, right? So let's say you get paid 2% in interest, but inflation is 5%, 10%, even sometimes 15%. It can be. I know the CPI says 9%, but real inflation is much higher than that. The real cost of living is going up much higher than that because CPI includes things that are that have been downgraded, have been decreased in value, have been debased, and similar to that, the U.S. government is giving you back money that's been debased over time. It's giving you back money that's worth a lot less. And this will, like I said, this will continue to happen until people start questioning it. Eventually, when enough people question it, they'll move away from it. And what will happen to the U.S. Treasury market when nobody wants to own treasuries? Because treasury prices are based on supply and demand. The U.S. government has the Federal Reserve buying as many treasuries as it can. So because of that, the demand is being pumped up, but there's also a lot of supply, right? The U.S. government keeps borrowing. Eventually, people will stop trusting the U.S. dollar, right? Eventually, people will stop trusting that treasuries are going to be paid back. When people stop trusting this, when other countries stop buying treasuries, that's when we see a lot of massive problems happen. So that's when we see that the Ponzi scheme is falling apart. On the other hand, I'm going to share something else with you. This is a chart that I shared before. 1 second here. Okay, so this chart shows you, so on, let's say, for example, with treasuries, you have no clue how many treasuries are going to be issued, let's say next week, next month, next year, 10 years from now. You have no clue. On the other hand, this is Bitcoin. This is Bitcoin's supply schedule. This is just a supply schedule showing you how much Bitcoin is going to be issued and when, right? So we see here, January 3rd, 2009 is when Bitcoin's first block was created. So if we go back to, I'm going to switch back to, let's see here. I'm going to switch back to the mempool. I just want to make sure that you can see that this is what's happening. So we'll go back to block 0. Block 0 is when the first block was created, January 3rd, 2009. Very first block. This is called the Genesis block. This is the very first block that was created. The very next block was January 8th, 2009. The next block was January 8th, 2009. 1 minute later. Very, very short time later. But if we go to, let's say we go to block 210,000. At this point, we had a halving. So what happens is, I've explained the halving before. I've explained what it is. Basically, the supply of Bitcoin being added to the economy decreases by 50%. That's what that spreadsheet was showing you, right? So if we look at the date, this is the halving block right here, the gold one. We can see here that 25 Bitcoin were issued per 10 minutes. On this one, 50 Bitcoin were issued. I'm not going to do the calculations here, but you can just look at the numbers. I'll stop sharing again. I'm going to go back to the spreadsheet. So with Bitcoin, we know exactly when Bitcoin will be issued. We know how much will be issued. We know how many Bitcoin are issued already. Nobody knows how many. Nobody can tell you how many U.S. Treasuries are going to be issued in 10 years, 15 years from now, right? Nobody has any clue. Nobody knows what the interest rate is going to be that the U.S. government is paying. Nobody knows what the interest rate will have to be for people to continue buying treasuries. Eventually, the interest rate will have to go up. Right now, the U.S. government is paying something like 4 or 5%. Eventually, it'll have to pay 6, 7, 8, 10%. And to pay that interest back, it's going to have to borrow even more money. It's going to have to keep borrowing more and more money. As it does that, it's going to keep flooding the market, flooding the economy with dollars. These dollars will continue to lose value. Things will get worse, right? It'll spiral out of control. So when people say that Bitcoin is a Ponzi scheme, I don't think they quite understand this chart, right? With Bitcoin, you know exactly how many coins will be issued. We know that there will be 20,999,999.9975530. 755,55530, So that's the amount of Bitcoin that will be issued. So 20.999999 Bitcoin. 20,999,999 Bitcoin in total. That's the total that will be issued. Almost 21 million. We know when these will be issued. We know somewhere around 2028, somewhere around 2020, 2032. These are just estimates based on how long it takes to create a block. But every 210,000 blocks, the supply of Bitcoin will have, right? And that's going to happen no matter what. Nobody can change that. Nobody can stop that from happening. It's a global network. This network works for everybody in the world. Everybody in the world is a part of this. Everybody in the world can be a part of this. There's no central third party. There's no central authority. There's nobody in the middle stopping this from happening, right? Nobody can change this. We're going to see every 10 minutes one block being created. Sometimes it's longer, sometimes it's shorter. We're going to see one blocks being created on average every 10 minutes. 2028, we'll see another halving, right? Right now, every 10 minutes, 3.125 Bitcoin are being created. In 2028, 1.5625 Bitcoin will be created every 10 minutes. Over time, this will keep decreasing. Nobody can change this. If it was a Ponzi scheme, on the other hand, this would be something that is not so transparent. We would have no clue how many of these things are available. We would have no clue what the interest rates will be tomorrow, whether or not the Bitcoin network will be able to pay us tomorrow. But that's not how it works, right? People say that, oh, the US dollar value of Bitcoin has gone up so much that eventually the people who own Bitcoin, the people who own Bitcoin won't be able to cash out. But that's the thing. The people who own Bitcoin don't want dollars. They want Bitcoin. They want to own Bitcoin. That's the thing that people can't wrap their head around. Most people can't get away from a financial system that's not denominated in dollars. They must keep believing that the US dollar financial system will survive. That's what they keep thinking, because they don't see that the US dollar financial system is a Ponzi scheme. Bitcoin is a commodity. Commodities prices are fully based on supply and demand. As supply decreases, as the block subsidy decreases over time, we're going to see Bitcoin's price go up. There's nothing that anyone can do about this. We even saw the price every halving, right? $12.48, $638.51, $8,475, $63,847. I think so. I'm going to make a prediction here. This is just going to be a prediction for the maximum price for the cycle. I could be completely wrong, right? This is just to prove to you that I have no clue what I'm talking about, right? When it comes to the price, nobody knows, right? Everything else you can figure out. The price is very, very difficult to determine because you don't know how many people will own this thing in the future. You don't know how many people will want it in the future. All that I know is that because right now there's, let's say, 1% adoption, in the future there will have to be more adoption. More people will understand this. More people will want it. So what happens when more people want something that's of infinite supply? The price has to go up, right? So I'll predict it. I'm going to create a prediction, and I'll put this in a huge red cell. I'm going to say I think Bitcoin can go to $250,000, right? $250,000. Change this to $1, and I'm going to. I don't think that stands out enough, so I'll make it all red. Okay, so my prediction is $250,000, the cycle peak. This means by sometime in 2028, when block 1,050,000 hits, we should see something like $250,000. But then it will drop, right? So maybe the price when Bitcoin is at block 1050 million, 1,050,000. Maybe Bitcoin will have dropped from that peak, right? Maybe it'll drop to 100,000. So let me just make this. So these are my two predictions. I have no clue what's going to happen. Nobody knows. For all we know, Bitcoin's price could go to 100,000 overnight and never drop below it. It could go to 250,000 overnight and never drop below it because of the finite supply, right? There's only ever going to be 21 million. There are already, let's say MicroStrategy, for example, owns 1 million of, no, sorry, 1%, almost 220,000 coins. They own 220,000 coins. Do you think they're going to sell them if Bitcoin's price drops to 30,000? They're buying today because they understand where this is going. The only thing you need to know about this is that the supply will decrease, demand will have to go up. Eventually, demand will go up. There's no stopping it. There's no preventing this. There's no way to get around this. Once you understand this, and you understand that the supply is decreasing over time, the new supply is being, no, sorry, not supply is decreasing. New supply is being added to the economy slower and slower over time. The inflation rate is dropping over time. Right now, Bitcoin is the scarcest asset in the world. The inflation rate is dropping over time, and it'll continue to drop, right? It'll continue to drop. Eventually, we'll see. So right now, in total, there's 450 Bitcoin produced per day. In 2060, there will only be 0.87 Bitcoin being produced per day, right? And then by then, we'll have 99.98% of the supply already out there. And once you look at this from this perspective, what's going to happen if you can buy one Bitcoin for $70,000 today? And I showed you the block reward. So the block reward was 220,000, and right now it was something like almost 4 Bitcoin when you include fees. Does that mean when only 1 Bitcoin is being produced per block, Bitcoin will have to be $400,000 to pay those miners? Is that what that means? I can't tell you. I don't know. But eventually, all I know is that Bitcoin's price will go up because it's not a Ponzi scheme, because it's purely based on ownership. There's no IOUs. That's what the old financial system is based on. You have to wipe that away from your mind, right? That's not relevant when it comes to Bitcoin. Ownership is the only thing that's relevant when it comes to Bitcoin. When you own Bitcoin, when you buy Bitcoin and you have it in your wallet, you own it. Nobody can take that away from you. Nobody can, if you want to sell it, there will be somebody out there who's willing to buy it. I don't know what the price will be, but eventually, but if you want to sell it, you'll be able to sell it, right? There will be somebody. Right now, one Bitcoin is worth $63,000. Sometimes it goes up, sometimes it goes down, right? At one point, it was worth $73,000. Eventually, it could be worth $20,000, right? I don't know. All I know is that demand comes in waves. Over time, price will go up. This is not a Ponzi scheme. You own a physical asset. If you think Bitcoin is a Ponzi scheme, you can easily say that housing, the actual house, is a Ponzi scheme. You can actually say, you can also say that something like stocks are a Ponzi scheme, right? You can say everything is a Ponzi scheme. Everything, if you consider Bitcoin to be a Ponzi scheme, gold is also a Ponzi scheme, right? So wrap your head around that. Try to see if you can understand it. If you have any questions whatsoever, let me know. I want to make sure that I can clarify this. So my predictions for the end of, let's say, 2028, I would say the top of the cycle will be 250,000. It could be a lot higher. It could be a lot lower, right? It could go to 1 million. It could, for all we know, it could peak out at 100,000. For all we know, we've already hit the peak for this cycle. I don't think that's likely, but for all we know, that's what could happen, right? Maybe whales start selling tons of coins and supply that's available to be bought automatically just suddenly increases. But the chances of that happening are very low, in my opinion, because people know that this thing is very undervalued. You can pay for 1 out of 21 million for the entire world. The entire world, all 8 billion people in the world have access to this, right? You can pay for one of these things. You can pay $70,000, right? So the entire thing is worth $1.3 trillion for the entire world. Everybody will have access to this. Everybody will need this. I think we'll see the price go up. I don't know when. This is not a Ponzi scheme. This is something that you should look into. This is something you should try to understand. If you understand it, I guarantee that you will want some. I guarantee that you won't be able to look away. You won't be able to ignore this. You won't be able to say that this is going to zero. It's not going to work that way. I know for a fact that over time you will want to own some. I've never met somebody who knows what Bitcoin is, who can clearly explain what Bitcoin is, and doesn't own some. That's about it for today. I hope that was valuable. I hope that helped you understand what a Ponzi scheme is, what Bitcoin is, how Bitcoin works. All this stuff will be very important. And once you wrap your head around this, you can actually start diving a little bit deeper into Bitcoin. You can start looking at how Bitcoin solves so many problems, how it resolves this or that, or makes the housing crisis a lot better, eliminates the wealth gap, gets rid of the actual Ponzi scheme, which is treasuries. All of this stuff is much easier to understand once you understand that Bitcoin is not a Ponzi scheme. So that's about it. I hope you enjoyed. I hope that was valuable. Check out the comments for more resources. I have a free ebook. I have a community. I have a way to help more people. I want to help more people learn. This is the way that I do it. All right. Have a great rest of your day. Bye for now.